Would-be homebuyers face a slew of headwinds over the next few months. On top of elevated mortgage rates, home prices remain historically high, and tariffs could drive up the cost of construction and future home builds. Getting the best possible mortgage for your housing purchase can save you thousands in the long run here. Here with tips on how to secure the best loan, we're joined by Rulon Washington, who is the Wells Fargo Executive Director of Mortgage Sustainability. Now, Rulon, great to have you back on the program with us. Credit score is king to securing a good mortgage. How can folks improve their credit score in order to get the best mortgage rate?
Yeah, so thanks for having me, Brad. Home buying season is right around the corner. And so as consumers think about buying their first home, they must also think about the credit perspective, right? So enhancing your credit score is the best thing that you can do to really get yourself home ownership ready. So just a few tips that I think are critical. First and foremost, know your credit score, right? Be able to track your credit. When you think about knowing your credit score, there are tons of Americans out there that do not know what their credit score is. And so there are free online tools for you to be able to track your credit and understand what's on there. Also, making on-time payments. That sounds easy in today's climate, but really that's one of the things that lenders look at when you are able to manage a mortgage payment, right? Is how are you able to manage that credit? So making on-time payments is critical as well, too. And keeping your oldest accounts open. There's a thing called credit age. And that's why younger folks may have a lower credit score. And as you get older, that score gets a little bit better. So really keeping those oldest accounts open is critical for you to have a really good score.
What are some of the common mistakes that you see people making when they're trying to get credit ready for a big purchase like a home?
That's a good question. So first and foremost is not tracking your credit score. Like not knowing what your score is one of the most debilitating things, right? So those free online tools allow you to take a look at your score to see if you have any liabilities that may be on your credit report that may be impacting your ability to get a mortgage. Also, avoid making those large purchases as you are planning to apply for a mortgage. For example, if you're thinking about getting a mortgage in December, don't go out and get that brand new car in June, right? As you think about an inquiry from a lender, that hard inquiry could impact your score when you're trying to get the house of your dreams.
That's a good point there. So ultimately, what are some of the costs that also need to be taken into consideration when you are buying a home and before you even go to the settlement table?
Well, Brad, it's impacted me. So one of the biggest costs is maintenance and repair costs. A month into buying my house 10 years ago, my AC shut out on me. So I had to spend $9,000 to purchase a new AC, right after I purchased my home. So when you think about just the maintenance and repair costs, a lot of folks don't take that into consideration. Another thing to think about is your property taxes and your homeowner's insurance. As a consumer, you can't control your property taxes, right? But every year you're going to have to pay them. If your mortgage is escrowed, you're going to pay them every month. So you think about that along with your insurance. Those are things that you have to make sure you account for when you're doing your budgets and you're financially planning for your mortgage.
When you think about all of the different housing markets that are really being navigated by consumers right now and potential home buyers right now, they're also going to try and get approved for a mortgage, and they're saying, all right, this is the income level that I've got, and
right.
What can I get qualified for based on this? Is there a sweet spot right now where you're seeing kind of one general rule of thumb number be applicable across many different markets?
Well, consumers are in different spaces. And so I think as lenders, we have to meet them where they are. So there are tools out there that are really advantageous for consumers. So many mortgage lenders have various tools that help you crunch the numbers before you make your big decision. A good tool is a home affordability calculator. It helps you calculate your future mortgage payments and help you understand what that sweet spot is. Because really, as a consumer, you need to understand where you are financially in the scope of the home that you want to buy. Yet dream home may be out of reach right now, but as you calculate your budget, it may be something that's attainable in the future.
How do you know when you're purchasing too much home, Rulon?
Oh, man, that's a good question, right? I think for us, in our minds, we never know. That house is never too big for us, right? But when you use those tools, it helps you get a realistic view of what you can actually manage. Sometimes that first house may not be the dream house. It may be that house to get you off the ground, that starter home. But then you can build to get that dream home. So be patient as a consumer. Understand your credit, understand your financial situation, and then find the best mortgage for you today.
All right, so I'm not swinging for the fences with a VR golf simulator out of the gate here. Understood. I hear you loud and clear, Rulon. Thanks so much for taking the time.
Thank you.